In the book, what I talk about is it's a magnetic vision. So the qualifier is for it to be magnetic. So you can't just have a vision, because if you have a vision and you're sitting in the closet not talking to anybody about it, it really doesn't matter. But the litmus test for that vision is if it's truly magnetic, meaning is it attracting other people to help you achieve that vision? That's the key. And so I think a lot about how entrepreneurs are articulating their vision to their team, to their shareholders, and then to the broader, what I like to call the community, but to the public. And when they start to get people that help and support them in executing the vision, that's where the magic happens.
This is the Entrepreneurs United podcast with your hosts, John St. Pierre and Rich Hoffman.
Patrick, welcome to the Entrepreneurs United podcast.
Thank you, John. Great to be with you and Rich here today.
So today, entrepreneurs, we're sitting down with Patrick Donohue. He's the CFO of Hill Capital Corporation, and he also wrote the book Breakout Valuation: How Can You Finance Your Future Today? And Patrick, one question to hit off. Our entrepreneurs want to know, they want quick answers on this podcast. What is the one thing an entrepreneur must absolutely do to grow the valuation of their company?
The one thing every entrepreneur must do is have a strong vision of where they're going. That's what really it centers on, is having that strong vision. And then a lot of the other valuation drivers are all around, might be more specific to the type of business, but every entrepreneur has to be the founder and the visionary of that business and where it's going, and that drives the most value.
Can you give an example of a time where maybe you were lacking in that strong vision? You personally.
Sure.
And maybe that was a time that anchored you in the need for it even more.
Yeah, that's a great question. A number of years ago, I founded a medical products business called Inspiration Medical Technology. And that business is still operating today. My co-founder runs it full time. And that business, we had started with a product, but we never really had the vision for where it ultimately wanted to go. And where it started to unlock value is when we really honed in on making medical products that are medical grade, professional grade medical products available directly for consumers. And with that vision and how we understood how we wanted to take professional grade medical products and bring it directly to consumers, that focused everything that we did, including new product development and even looking to acquire businesses.
And then what's an example on the other side where you would say, here's where we had a really strong vision and it paid off. It worked out. It really anchored the need for a vision again, moving forward.
I feel like I'm living it daily with my investment fund, my company, Hill Capital Corporation. And so right out of the gates 10 years ago, we knew we wanted to build an investment fund that really helped what we call the capital gap. And that is the gap where companies aren't getting the money that they need and they fall in between what angels and VCs look for and what they can get from a bank. Filling that need in the capital gap and having that vision has been our mainstay literally from day zero. And that has really helped us. We knew out of the gates that we wanted to test the investment thesis, but ultimately we wanted to take the investment fund national. And so that's why today we're executing a plan to invest in over 500 companies by the year 2040. And so it's really that centering vision that my team has and all of our community, which includes our investors and our shareholders in Hill Capital Corporation.
How would an entrepreneur know that they have an appropriate vision as you would measure it? Is there a litmus test? Are there like 4 components? Is there a question they can ask themselves? How would they know, hey, I have a vision, as Patrick would call it a vision, or given what Patrick's saying, maybe I have a little bit of work to do?
And that's why in the book, what I talk about is it's a magnetic vision. So the qualifier is for it to be magnetic. So you can't just have a vision, because if you have a vision and you're sitting in the closet not talking to anybody about it, it really doesn't matter. But the litmus test for that vision is if it's truly magnetic, meaning is it attracting other people to help you achieve that vision? That's the key. And so I think a lot about how entrepreneurs are articulating their vision to their team, to their shareholders, and then to the broader, what I like to call the community, but to the public. And when they start to get people that help and support them in executing the vision, that's where the magic happens. And that's where you see a lot of our celebrity entrepreneurs that are in mainstream media. It's because they articulated a vision that became magnetic. And you could name any of the who's who of entrepreneurs in our world today, and I could easily point to a magnetic vision, and we all could, because we would all know what that entrepreneur stands for and what they're working towards. That's the key.
So if I said, hey, Patrick, I love it. I'm bought in. I want to have a magnetic vision.
Yes.
How do I develop a magnetic vision versus just having a vision? What is the process you might take me through to ensure it's magnetic before I just trial and error to see if people are with me or not?
The process I walk through with entrepreneurs, and what I would encourage entrepreneurs to do, is to get people like you guys, coaches and people that understand the journey of entrepreneurship, to ask them questions, to really draw out of them the why and the how. Because that's where things get magnetic, is when they've got a personal story that goes along with that vision. Something happened. A really easy one for me to always think about is when I'm investing, I see a lot of medical device companies. And a medical device company, a lot of times, will have a story of the founder where they had cancer, a relative had cancer, and that drove them to work on thing that they're building, or maybe had heart disease and they're working on a device that helps with heart disease. That is a great example of somebody that has a very natural magnetic vision. And so I love like Simon Sinek's work. We start with why. You could point to a number of authors and thought leaders around this subject, but when you work with people that can really help draw those questions and help draw out that information of that founder story, that's typically the fodder, the foundation for that magnetic vision of where they ultimately want to go to this, for this. So,
Patrick, you and I share the love of start with why and Simon Sinek. As a matter of
yes.
fact, had a business that I was coaching yesterday. I was in town, and we start every strategic business planning meeting with that 7-minute video from his TED Talk 20 some years ago, whenever it was, about that golden circle. And if you
Yes.
haven't watched that video and you're listening to this, go to YouTube, type in Simon Sinek start with why, and you'll see what Patrick's talking about. It absolutely is at the core of where you need to start. Patrick, I'll share this with you. I had a little bit of a problem a few years ago. I had a massive vision, and it was very magnetic. It attracted a lot of people, some good, some not so good. It was a vision. We were around a $10 million company, and I wanted to grow to 100 million. I wanted to 10x the business and had a massive vision of how we were going to get there holistically. And we started going.
Sure.
Well, 4 years later, we were on 55 million and on track. And I got fired. I'd grown that company for over 15 years, lost control of the wheel, so to speak. Our business was growing way too fast for banks. We started bringing on some investment dollars. Next thing you know, I wasn't the right person to bring the business forward and lost everything. Had a great vision, was magnetic, brought people in, but obviously we're missing core principles that I needed to know to be able to successfully get my business to its vision without losing everything. In your experience, what are some of those core principles beyond vision? Okay, great. You got a vision, it's magnetic, everybody's on board. What are the other things you've learned by working with entrepreneurs? It's okay, that's the first step. And you also want to make sure you have these ones as well.
So what we're talking about in large part is a magnetic vision for an entrepreneur. And so by default, it's typically for their business interest or interests. But what I encourage entrepreneurs to do in everybody, not just entrepreneurs, but they need a vision for themselves. Now, some people may have a vision where they want to take a business like you did from 5 million to 50 million and exit or step aside and to hire other people and become an owner or just to sell their stake or whatever. And so really thinking about what their interests are along the entrepreneurial journey is really important as well. Now, there's always challenges with growing businesses because, yes, as you bring in capital and there's other stakeholders and people will challenge that vision, you build out a board and you might not be able to control that vision as much as you want to. Now, if you take a step back and if you could look back at the John of 15 years ago and to have that John of 15 years ago to say, what is more important to you? To execute a vision and to risk losing control, but to make it into something really big and to risk losing that, or to have full control over that vision and thus by default probably keep it a bit smaller and bootstrapped or whatever the case may be. And I think that's really important because at Hill Capital Corporation, we're investing in a lot of entrepreneurs who own 100% of their business or the vast majority, where they're truly owning their vision. There's not a lot that could really derail that vision in terms of external factors because they control it, but it does change if they were to all of a sudden have a full board of directors and they're down to owning 40% or whatever the case may be. And so I particularly appreciate entrepreneurs that want to be in full control of their vision because that is completely fine. Some people call lifestyle businesses. I'm not a fan of the term, but I get why people say that. But if somebody wants to grow a business and grow it from 1 million to 5 million and 10 million to have full control, that is very valid. And a magnetic vision for themselves in the business is just as important as it is going to be for the business that goes from 5 million to 50 million to 100 million. And all of a sudden they own 20% over time and they could risk getting kicked out like you did and Steve Jobs and other cases that we've seen throughout history.
Wow. Rich, you know too my story. For you to say what you said is pretty interesting for a lot of reasons. Number one is this happened a little over 5.5 years ago when I got terminated. And the first thing I came to conclusion of, and I've shared many times on this episode, on this podcast, is I had a strategy for the business, but I had no life plan for myself. I didn't know what I was trying to achieve.
Yeah.
I was just running. I was just like, yeah, let's go. Meanwhile, my equity is being diluted and lose control of everything. I didn't know what I was actually trying to achieve. Knowing what your life plan is, your business plan is, the first thing you said was the first thing that I was like, oh my gosh, I need this. And then I mentioned before we got on, I wrote a book called The $100 Million Journey, my path to growing a business, 100 million, failing, and pick myself back up and growing in the right way. And I have 7 principles in the book, Patrick. Principle 1 is the second thing you said. Protect and grow your equity.
Yes.
Right? Protect and grow your equity. If you want to grow a business, that stuff doesn't happen to you. You have to protect and grow your own equity. So both things you said are at the core of my learnings through that massive failure. And I want to learn some more here. Help me understand though, if you're an entrepreneur listening to this, you mentioned you closed the gap between angels, VCs, and banks. And then you just talked about the fact that a lot of the entrepreneurs you work with want to maintain control of their businesses. A lot of them own 100% of your businesses. Can you maybe close the gap for those listening to that and going, okay, hold on a second. You're a capital company that helps invest in companies, but they own 100% of their business. Where exactly do you fit? And what's like a perfect entrepreneur business for you? And why do they want to bring Patrick in to invest in their business?
Excellent question. And I love talking about this because it is near and dear to my heart. So in my estimation, 99% of small businesses, of companies that are private, do not fit traditional angel and venture capital.
Correct.
The reason being is because somebody that is buying equity in a business, pure equity, like an angel or a VC does, they need an opportunity to get $10 to $100 back for every dollar that they put in. Now, I believe, and I'm very confident, only 1 or 2% of the companies in the world can actually provide a return opportunity like that. And that's why they get boxed out. Now, don't get me wrong. There's a lot of companies that, a lot of angels, I'd be like, if I just double my money, that's great. So there are outliers, but the really sophisticated investors need the opportunity for 10 to 100x if they're going to buy equity in a liquid private business. So therein lies the rub. Now, on the flip side of our financial institutions, in large part banks, what we know as banks, they have very tight parameters on what they can lend against. They need collateral. And then if a business is big enough, they might be comfortable with cash flow. And sure as heck, 99%, and that literally that's the number that JP Morgan Chase has published in Pepperdine University, have a personal guarantee on that debt. And so there's natural constraints there as well. So what about all these other companies? Like, what about Mercedes, who started Mercury Mosaics that makes beautiful handmade tile in Northeast Minneapolis? Her customers include Lululemon and the Whitney Museum and several places. Doing a great job, has been running this business for 20 years, does a couple million in sales. But you'd have a hard time putting together a story of saying this business could return $10 to $100 back for an equity investor. So that's where the gap is. Now, how we do this is we make an investment in a business, but we structure it so we can get paid back over time.
Okay.
So it's really bridging the company to get to strong profitability, and then we can get paid back. And so we utilize the combination of a note and a warrant, which is a right to buy stock. So we utilize that structure for these types of businesses so they can take it to the next level and to pay us back. And then that can work well for us and our investors. It can work well for them. So then we don't need to sit on their capitalization table as a shareholder and hope and cajole them someday to sell their business for cash, because selling it for stock doesn't count, and selling for cash, because that's the rub. So we call that a VC equity-based note. This equity-based note is really key. We'll take equity-like risk, but we structure to get paid back over time.
In addition to providing money, what support do you provide in the way of either coaching or counseling the owners on the future of their business and its growth?
Yeah, that's a great question, near and dear to my heart as well. So we have capital, that's the money, and community. And community for us starts with our portfolio companies. So allowing them to connect with each other and to help each other out. But then we also right now have 57 ambassadors. And our ambassadors in large part are retired executives or entrepreneurs who have sold their business. And many of our ambassadors are also more mid-career. So if you think about people who are more adept at technology or the use of digital marketing, things that are current trends, they're ambassadors as well. They serve as advisors to us as Hill Capital Corporation, and more importantly, as advisors to our portfolio companies. We don't charge for any of that. We don't charge fees or anything like that. Our community is part of our ecosystem to help support these companies, to help them build and grow. And then for our team, we do two things. One, we are doing periodic check-in calls, and we help a lot with their financial modeling. So we do a lot of cash forecasting and analysis to make sure the company stays properly capitalized. And then we're also doing a number of events. So we have our Hill Capital Summit that we do annually, where we have about 120 people, primarily our portfolio companies and entrepreneurs we're getting to know. And then our ambassadors come together, and we'll have a day-long event. Similar, but very different, I'm sure, than the retreat that you put on for your clients.
With the 57 ambassadors, what's in it for me, if you will? You said you don't charge people for it. Presumably the ambassadors are volunteering this time. This fits their vision, or what is that about?
The core of our ambassador group are very successful people. And frankly, even if we paid them, it just wouldn't move the needle for most of them. And why they do that is because they have an element that they want to give back. And as one ambassador told me very early on, one of our shareholders, I said, "What can we do for you?" or "What's in it for you?" I asked that exact question. And he said, "Patrick, I just want to remain relevant." And so for a lot of our ambassadors, they're to a point in their lives and their careers where they were struggling as entrepreneurs or in their careers, and they want to help out the next generation of entrepreneurs. And that's a big motivation for most of our ambassadors, is that element of wanting to give back.
Yeah, give back, mentor, coach. It's so fulfilling when you can go in and help businesses.
Exactly. And for some of them, they might be helping out quite a bit, and maybe they take a board seat and there's some economic incentives for them. But in the large part of the front of the gates, it's to give back.
Yeah. Patrick, you wrote a book in 2022, Breakout Valuation. And I'm sure a lot of the concepts we're talking about are in such book. When I hear the title, Breakout Valuation, I think about, I'm growing this business. I want it to be as valuable as it possibly can be. and I want to make sure it can capitalize itself and grow and be this fulfilling business for me and my partners or my employees. And a lot of times entrepreneurs create these businesses, and you mentioned the word lifestyle before, and sometimes it gets a negative connotation because it's seen as you built a business that pays you a salary, you bought yourself a job, and you're really not
Right.
in a position where you can create this breakout valuation for your company that can really fulfill your dreams as an entrepreneur. If somebody would be picking up the book Breakout Valuation, what would be some of the key things they'd be hearing in that book about really having their value grow?
Yes. So breakout is all about mindset.
Okay.
It's really about the mindset of abundance. And the book is not about how do you maximize every possible dollar on the exit of the business.
Okay.
Because it's not even about having to sell the business someday. Because a breakout valuation does a lot of things beyond just value of what the equity is worth in the business. Having a business that's valuable and, more importantly, perceived as valuable to other people in the ecosystem is hugely helpful. You think about employees. Do employees want to work for a company that is struggling or you're not sure what the value is? Or do they want to work for a company that's perceived as very valuable? They want to help create value. So it attracts and retains really good employees. It attracts and retains really good customers. It helps with vendor relationships. Is a vendor going to give better terms to the company that, who knows, are they struggling, or that is building and growing and is becoming more and more valuable? They want to grow with companies as well. So it does a lot of things for the entrepreneur. But at the end of the day, what all of my work does in this book, it goes into details around the real drivers of value and how to think about all this type of stuff. But breakout is all about getting the value today based on what the business can do in the future. And that's why the vision is a very key component to this, because it's all about where the business is going. Breakout is a mindset around abundance. Where are we going? What does this look like? And being able to attract all the things that help that journey, and especially for the entrepreneur, to make that journey a bit easier.
Shame on me, but I know you have a CFO background. So I saw Breakout Valuation. I was getting my calculator out going, okay, what moves do I need to make to grow my valuation? But I love the fact that it's all about mindset, the mindset of an entrepreneur. So you said in your book, you talk about the real drivers of value, and that vision is at the core of that. What are
Yes.
other real drivers of value that you talk about in your book that we would read about?
Well, I'll compartmentalize. There's 9 components to a breakout valuation. And it starts with confidence, because somebody's got to be confident to have a vision. But so it's got to start with you internally, that confidence, and then the vision, but then curiosity in what you guys are so good at, especially with your coaching work. But it's curiosity, asking good questions and being able to explore people, who's involved, who's around you in your ecosystem, in what I like to call community. Next is communications. So it's one thing to have a vision, but how are you articulating it? How are you communicating it to your team, to your shareholders, and as importantly, to the public? Next is cash management. The next few get a little more of what one might think of around valuation, but it's cash management, because Apple didn't become valuable because of the iPhone. It became valuable because they survived and they knew how to manage cash early on, and some of the things that they needed to do to manage cash early on to get to the point where they could launch these new products. So cash management's a really key piece. And then the last 3 is financial forecasting. Really, so having a vision's one thing, but putting it to numbers, like what does this look like over time? Capital strategy. How do you capitalize that growth? And then finally, business design. So once you've got all the foundation laid, now you can work on optimization. You can really think about the business design and making things, increasing margins or making things more efficient. So that is what I lump into business design. But those are the 9 components that really go into breakout valuation.
I love the 9 of those, and 2 of the 9 stand out to me as slightly different.
Sure.
7 of them are about learned skills.
Yes.
And 2
Yeah.
of them seem more innate to the person. The first one I think of is confidence,
Yeah.
and the other one I think of is curiosity. And the reason I think of confidence is there are some people that just have a lifetime of low self-esteem, of low confidence. And I want to ask you a question about that. And then the next question I'm going to ask you about is on curiosity. There are people who have a lifetime of being all-knowing and finding when they don't know something that is highly vulnerable and can be used against them. So what I'm curious about is in each of those, how would you work with an entrepreneur to increase their confidence? What are the steps involved to say, hey, Patrick, yeah, my confidence isn't there. What should I do? And then the follow-up question is going to be on curiosity very similarly. Hey, Patrick, yeah, I know there are times I can be arrogant. What should I do to change who I am when it comes to that?
For those that are on YouTube listening to this, I'm going to just reference this, but it's right in the book and it's right on our website. And it's a web diagram with those 9 components. And so what I mentioned in the book is that you don't need to have a 10 out of 10 on all of these components. You can be weak on a few of them because you think about like it being a web and kind of being good enough to get to where you want to go. And you bring up a wonderful point. When somebody's like very weak on one of these, can they do? And a lot of this is how I think about it is awareness and really having like coaches like you or others to really be the mirror to that person to say, how are you thinking about this? And helping them recognize where they might be lacking. It's in the book with that web. There's a number of questions for each of those 9 components at the end of the book that say, here are questions for you to reflect upon and to help you rate yourself. It's not scientific, but it's helped someone get there and understand where they are in their journey. And so when I think about things like confidence, I think about, and I'm a big fan of BJ Fogg in Tiny Habits. And then I think it's James Clear with Atomic Habits. But their whole piece on habits is you start with the small step. And so if somebody is lacking any component, but what we're talking about here is confidence, I would start very small. If they are not confident in speaking to employees or to shareholders or to launching a product or whatever the case may be, I would be figuring out like what is literally a tiny step they could do today, this moment, and what could be the step after it. If somebody wants to run a marathon and has hardly ever run before, you don't start by running a mile that day, let alone the marathon. You start by putting your shoes next to your bed the night before and just putting on your shoes the next morning and go for a walk around the block and then a run around the block. That's how I actually got started running. A few years ago, I never ran. And that's how I got started after reading BJ Fogg's work. And so that's how I think about these things is when people are lacking in it is just to start small and to build that up. But at the end of the day, it's all about awareness. And that's why I start with things like they have to really start with themselves on this whole journey, whatever you do in life, but especially with entrepreneurship, because this journey is already hard enough. And it's frankly quite dangerous if somebody doesn't really know where they're at with all of these things. And again, that's why the work that you guys do is so important because you can really be that effective mirror back to people and helping them in their journey.
When I asked you that question, I had no semblance of an answer. But as soon as you said awareness, I'm like, oh my gosh, yes, that is the right place to start, is starting to get higher consciousness of the patterns and preferences that you have that don't serve you. And then learning what are the coping mechanisms, what are the compensatory skills that you could start to employ to act differently than your preferences. So if you're the type of person who doesn't have a preference for curiosity, first place to start is knowing you're that type of person. Right. And then the place to go next is going to be, okay, what do I do now? And how do I, to your point, Patrick, start small and not try to totally change who I am, but how do I just take a step in the direction of something that's not my preference? So again, I did not think of, here's what I think Patrick's going to say. I'm going to tee him up, but wow, we aligned on where you're going on confidence and curiosity, because the other ones, when you look at vision and communication and cash management, those seem much more concrete versus personality oriented, if you will.
Yeah, and it's a great point. I had never thought of it in that way. I've always thought of it as like soft skills and hard skills, but you're absolutely right. It takes a combination because at the end of the day, we could get all nerdy about valuation, but at the end of the day, it comes down to the people. And especially for an entrepreneur, it comes down to them as a founder in what they're doing and what they're executing it to. And is it really building value in that business or not? And a big reason I wrote this book is because I was at an event with a bunch of entrepreneurs, and an entrepreneur came over. He knows my work and that I invest in businesses, and he confided in me. And he goes, "Hey, Patrick, these people are approaching me and they say my business is worth 3 times EBITDA and da, da, da. And I think I might be interested in like selling and so forth." And I go, "Oh no, they got to him," because no entrepreneur should have to know nor care about what EBITDA is. The term is made up. It should not even have existed in the first place. So it's valid to think about cash flows and so forth, but EBITDA is not a term that entrepreneurs should have to worry about. But of course, all the business brokers, all the even valuation experts, Wall Street, everybody talks about an EBITDA multiple. That is correlation of what a valuation is when a business is sold. It's not causation. And that conversation, and this is why I wrote the book. I've done discounted cash flow models my whole career. I've done fairness opinions on public companies. That's my whole background in my career. But literally, that story, and when I was on the manufacturing floor of a company and I looked around, I had that realization one time several years ago. I said, this is what's creating value. It's not because this value happens to be worth 3 times cash flow, or what most people would say 3 times EBIT, or business workers would call it sellers' discretionary earnings. It's all mumbo jumbo garbage. That's correlation. It's not causation. And that was why my life's work really wants to help entrepreneurs refocus what they've always known to be true, but to have a finance expert point this out, but focus on the real things that build value, because that's what they can do and they can control. The other stuff is mumbo jumbo garbage they don't have to worry about.
I love it. I love it. I'll even make you squirm a little bit more. Management adjusted EBITDA. I was going to go somewhere and you're going to have me go there even harder just to close up this conversation. When I look at these 9, the last 4, when I sit down with entrepreneurs, there's not any entrepreneur who knows what their net operating cash flow is or have a 13-week cash flow model.
Yep.
Barely some of them have financial forecasting that they call a budget, maybe. None of them even know how to do a capital strategy. They don't even know how to start the paper on a capital strategy. Yep. And some of them have business designers or strategic plans or EOS models or things like that. But those last 4 made me happy. I knew that the CFO knew it was going to come out at some point. But I love those, but there's a big gap there. And by the way, there's also a gap in people management and leadership and communications. I'm not trying to discard the first top of the list. But when you start getting the cash management, financial forecasting, capital strategy, business design, there's a lot of entrepreneurs that had a great vision. They're great at selling their product or service. They're great at what they do. But when you start getting to these levels that are so critical to grow your business the right way, they really struggle with what should those entrepreneurs do if they don't know really how to manage the financial aspects of their business to break out the valuation. What should they do?
Yeah, great question. So all the work going into the book, I work so hard with my editor and publisher to write everything in very plain English. So it's all approachable for entrepreneurs, no matter their educational background. And here's the one thing that entrepreneurs need to know. It's the cash management trifecta. They need to know at any point in time their cash balance, what others owe you, and what you owe others, and you being the entrepreneur, right? So cash balance, what others owe you, and what you owe others. I could throw a bunch of fancy accounting jargon at those last couple, right? Accounts receivable, blah, 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 blah,
Yep.
Debt, and so forth. But it's literally, what's your current cash today? What do others owe you? Do you have receivables, or for some reason a loan outstanding, or people owe you money? And then what do you owe others? What do you owe your vendors? What do you owe in any loans that you have, and so forth? And so really, an entrepreneur, if they can focus on that cash management trifecta and keep in mind that the current cash plus what others owe you needs to be greater than what you owe others, it's a wonderful starting point to keep it really simple for entrepreneurs to get going, to have them think about those things. And what I encourage entrepreneurs to track that on a weekly basis or a daily basis. Log into a couple accounts and just keep track of those things. And then what that does for them is it starts to help them get comfortable and unlock, why are these numbers changing so much? Why do they fluctuate, or what's happening over here? And they start to get more comfortable as, okay, yes, because we built this and now they owe this and this cash hasn't come in, and whatever the case may be. So that's why in the book I talk about cash management trifecta as a very elegant, simple way for entrepreneurs to just get going and to really help them understand what their business is doing.
Love that. Patrick, you've given us a lot here today. How can entrepreneurs reach out if they would like to talk to you a little bit more or learn more about you?
Yes. So it's very easy. My email is my full first name, Patrick, at Hill Capital Corp, HILLCAPITALCORP.com. And you can email me, reach out. And then my website for the book is breakoutvaluation.com, where you can come to hillcapitalcorp.com. And then I'm on LinkedIn. So if you heard us on the podcast here today, just shoot a note that we met here, and I'm happy to connect and chat with any entrepreneurs if there's something I can be helpful with.
Awesome. Thank you, Patrick.
Thank you.
Yes. Thank you, Rich. Thank you, John.
Stay tuned as John and Rich unpack today's conversation.
John, with these 9 areas, I've got a hypothesis and I want to run it by you.
Let's do it.
Here's my hypothesis on, in your coaching business, where your specialty lies, and in my coaching business, where my specialty lies. Although we can both at some level work in all 9, I believe, I think there are 4 that are a strong suit of yours that stands out, and 4 that are a strong suit of mine. I take vision and I go, both of us are really good at vision. Now, when I take that out, I go, I think your biggest strong suits, John, are cash management, financial forecasting, capital strategy, and business design. And when I think of my strengths that stand out, they'd be the remaining 4. Working with people on confidence, curiosity, working with people, and communications. So I found that really interesting because you and I have always known, hey, we can kind of complement what we do together. And you're kind of on the financial side. I might be a little bit more on the leadership side, but I actually found this to be a wonderful breakdown. And again, not that we can't cross over, and we can to some extent, but we each have our strengths. And within these 9, I think I found words for them.
Yeah, no question. And what people don't know is in the year 2008, Step Brothers came out, the movie, and they created Prestige Worldwide. But before Prestige Worldwide, in the late 90s, was Visions International, a company you and I started called Visions International. We had these little pins called Visions that we wore. I can't remember, maybe the ATM business we were trying to get into. There's a bunch of businesses that we were going to try. It was called Visions International. So I would agree with you on step number 1. We both have that vision piece locked in. And there's no question. I don't think it's a hypothesis. I think it's very strongly stated that the other 8 clearly divide between where we both have fundamental strengths. We also can, to your point, do the other sides, but I love them all. And it's certainly, I loved hearing some of the thoughts around the simplicity behind don't overthink it. Don't overthink it. Have a vision that's magnetic, that people want to engage, but don't just do that. You also have to have all these other components that go along with it. And even when we talked about cash flow, the ability to say people overthink about it. They're talking about a multiple of EBITDA. Most entrepreneurs don't know what EBITDA stands for. They're just using the acronym because they heard it from an investor or somebody buy it. They know what the words are, but they don't know really what it means. And for him to break it down, I go, no, just worry about the cash flow trifecta, or just worry about this. Like, he had a very simple way of communicating how you can break out the valuation of your company without having to break out your calculator and your spreadsheet and try and figure it out. Because that can be really intimidating to entrepreneurs, and therefore they don't touch it. They just avoid it. And that's not a good thing either.
It was funny you brought up Visions International, having created that, and both of us being, we believe, pretty good with working with others on creating their vision. That being said, his idea of a magnetic vision and his idea of how to know you have a magnetic vision really resonated for me. So having that personal story that goes along with the vision, And the personal story really can't be, I want to go from 5 million to 50 million. That's my personal story. That's not a magnetic vision. The magnetic vision is something that's a personal story, usually a story that's going to include overcoming something that's difficult, usually a story that's going to include something that was a challenge. You have a great personal story with 5.5 years ago, having been fired from your own company. Out of that story, what a great, compelling vision that you've been able to crystallize. And that was the foundation of your book. And I think that's why you're getting such traction with the vision that you have.
Yeah, there's no question. I love the fact that it starts with that and not just a vision of let's make $1 million. Kara Kalin, who we've had on this episode before with Shift Change, her vision is so powerful and strong. It's emotional. That's how strong it is. And when you have that strong passion and you combine it with the confidence and the curiosity and the people and the communications and the cash, you're unstoppable. And he also mentioned something about Apple, which is the perseverance. When you have that vision that everybody's bought into, you can get through COVID. You can get through this, that, or the other thing. You can get through tough economic times because it's so bonding. It's so strong that it's just invincible. So I really love that. And where Patrick hits is a very unique spot. We've had investors on this podcast. We've had people buy companies on this podcast. We've had coaches on this podcast. What I really think the sweet spot he fills is it's not so easy to go to a bank these days and say, I need some capital for growth. I'll take your 2 kids, I'll take your car, I'll take your house, I'll take your PG. It's just not easy, right? And as your business grows, you need more capital. A business that grows take more cash. Growth takes cash. And so where he comes into a position of not only can he provide some of that capital, you retain your equity, and he can provide mentors to help support you along the way. And he's a CFO in his back and can help you with those 4 elements that maybe you're struggling with on the financial cash side, which a lot of entrepreneurs do. So he has a really unique proposition for entrepreneurs to do it a different way. Do it a different way. Don't sell your equity to bring in capital. Don't go sell your soul to the bank, right? Bring on a partner that can really help you grow your business. It's a very sweet spot. And I love just his approach. I love the way he talks about business and entrepreneurship. Really something that's very compelling to entrepreneurs.
And the idea of get value today for what the business will do in the future. No wonder why the idea is EBITDA is actually not causal. It shouldn't be to the valuation. It's correlated. So yes, EBITDA matters to the valuation, but it is not the be all to end all to valuation if you want the value today for what the business is going to be tomorrow. And it totally resonates that what Patrick's experience is that people use that as a causal formula, looking at EBITDA times 5 as a multiple or EBITDA times 3. And that's not it. You can actually get value today for what the business will do in the future. And that's not attached to EBITDA necessarily.
Yeah, it's all a mindset and how you view things. And if you have the right mindset, you have the right pillars for growth, you have the right drivers of value, you can actually create the business of your dreams. But it doesn't have to be the $100 million business or the $1 billion business. It could be a real small business that you control, that you love, that you grow, you have employees that are in it that grow, and you can actually get breakout valuation from that small company aligned to your life plan. I loved where he went there as well. That really hit me, right? That's where I had a big gap and miss. Have that right mindset for your business growth is a key piece of the puzzle.